and it's the nature of the asset. I mean, I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125, it'll lose half its value. I mean, one thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. Been in it a while and they're trying to orange pill their friends to explain to their friends what this asset is and how volatile it is in these early days of adoption. And the only way, as you and I both know, the only way you really get hurt in Bitcoin is to chase a new price high, to then have it go over the top of the cliff and go down, 20, 30, 50, in the worst case, 70 or 80%, but I don't think we'll see many of those anymore. But I mean, 50% down seems entirely doable to me. From any level, really. I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125. It'll lose half its value. I mean, one thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. I mean, in the early days, I think there was one drawdown that was almost 90%.
Lawrence Lepard presents a bold vision. The collapse of traditional financial markets could trigger Bitcoin's meteoric rise, possibly pushing its value to an astounding $1 million amidst financial chaos. Once dismissed for its volatility, Bitcoin may soon become the world's most powerful and stable asset. What seems like madness today could form the foundation of tomorrow's financial revolution. While Bitcoin's price swings have long been controversial, Lepard views these fluctuations as signs of a transformative shift. He cautions against chasing quick profits that often lead to painful crashes. However, Lepard doesn't predict constant downturns. Instead, he foresees Bitcoin climbing to $200,000, $250,000 in the next 18 months, followed by a brief correction. What's truly thrilling, though, is that as Bitcoin's adoption expands, its volatility will diminish, creating a smoother yet more explosive upward trajectory. Bitcoin's rise to $1 million isn't a pipe dream, but a logical outcome of its increasing influence as outdated financial systems crumble, ushering in a new economic era. Watch Lawrence Lepard's powerful interview for more insights, and don't forget to like, subscribe, and turn on notifications for more detailed content. Thanks for joining us. Enjoy the video.
I think the average person, the average investor, I still encounter this a great deal, feels like stocks are the place to be. They know we live in an inflationary world, and the way you hedge that is stocks. And stocks have slightly outperformed gold over long periods of time. And stocks do represent claims on businesses that throw off, earnings and dividends. And so the stocks aren't bad per se when they're appropriately priced relative to what you're buying. The problem is that the stock market right now is at, historic highs on any metric you want to use, the Buffett indicator, whatever. It looks like 2000 or 1929. And so you're not getting everyone's in that stock bet already. They've already made that bet. And so there's not, it's fully priced, in my opinion. There's not a lot of upside in it. And I think what happened in 2020 and changed is that we went from a 40-year period of deflation where, interest rates were coming down, driven by a lot of things, by all Jeff Booth's stuff about technology and so on and so forth, and the China price. But we went from that period and it got ridiculous. I mean, we had $18 trillion of negative yielding bonds. I mean, that's about as deflationary as you can get when you have to pay somebody to hold, to hold your money. I mean, come on. So that it was just extreme, right? I mean, the 10-year was at 50 basis points in March of 2020. So bottom line is that reversed, in my opinion, violently. When we had the COVID event and the 40% growth in the money supply. And so, and history shows that you really can't put inflation back in the bottle very easily. That once it gets started, it kind of tends to continue because everybody wants their piece of it. I mean, a good example of this is, we're supposed to be aiming for a 2% target, right? Well, the dock workers, the longshoremen went out on strike last fall in October. They got a 6-year contract with a 60% increase in their wages. That's 10% a year for 6 years. All right. 10% a year for 6 years. So, I mean, that basically what that shows you is that when labor and how were they able to get that? They were able to get that, one, because they had a union, a lot of power. They fought all the automation of the ports, etc. But But more importantly, they had just been screwed. I mean, they'd had a 40% increase in the money supply. And so suddenly whatever they were making bought 40% less goods and services. And so they were pissed, and they had the power, and they went and they demanded this higher rate. Well, okay, that higher rate, fine, they get it, and I get it. I get why they got it. But the point is, that's going to flow through to every single piece of goods and services that comes through those ports. And it's locked in for 6 years. So, and 10% is a long way from 2%, the 10% annual increase they got. So the point is, we live in an inflationary environment now, in my opinion. And because of the math, and I've laid this out in detail in my book, and you know it, and Lynn Alden has done a great job laying it out as well, with her "nothing stops this train" meme on how the government spending is out of control. And we can get to Doge in a minute. But, because of the math, they really have to keep the system inflated and inflating, or else it collapses. I mean, it's like, inflate or die is kind of the mantra. Holding on to your coins makes sense. Putting it into the real estate makes no sense, right? Yeah.
Correct.
Yeah. No, I mean, my kids are in their 20s. They can't buy housing, and they're doing fine. They're making good money. But yeah, the system is, but that'll get re-equilibrated. I mean, as this change that I'm describing takes place, the monetary premium in housing will go away. And those who decided to hold Bitcoin versus housing will be able to buy plenty of house, in a few years. You're already starting to see that. I mean, housing prices are soft all over the place. So, and I suspect they're going to get much, much softer. So you're going to be able to buy your house, but it's obviously in the shorter term, I would advise anyone who's young right now to rent, not buy. Because I think on a relative basis, I mean, I'm sure you've seen, in fact, I had it in the book. I'm sure you've seen that meme that shows how many Bitcoin it took to buy a house, right? Where the average housing price has gone up substantially, but the number of Bitcoin necessary to buy a house has gone down substantially, for the past 15 years. So look, Bitcoin is honest money driven by math. And, it's the most honest form of money mankind's ever had, because there's no dilution in it. Even gold gets diluted at 1.7% a year. And the book has a whole chapter, where the title of the chapter is "Sound Money is a Moral Issue." And it really is true. I mean, there's a lot of history to support that. I mean, people in the Bible, this is thousands of years ago, they were writing about honest weights and measures, because, the history of people messing with the monetary system to try and get advantage, this has been around for a long, long, long time. Fiat currency has abused a lot of people over many, many years. This isn't some new problem. It's kind of new and acute right now, getting more acute, post 1971, and as we go into this whole cycle. But, I think what'll happen is, the broken money like we have, fiat money like we have, leads to fiat sort of behavior, gambling and, bad morals, and not thinking about the long term, and, just kind of spending your seed coin, and cheating to get as much as you can, as quick as you can, because you really don't care about tomorrow. Whereas, sound money people very much believe in investing and being patient, and, you plant a seed for a tree, and you watch it grow, and you don't chop the tree down just to get the wood when it's a couple years old. I mean, and so to me, money is all about kind of reaping and sowing. I mean, you've got to reap savings, and then ultimately you'll sow the benefit of those savings. Of course, you won't if, you're saving in fiat terms, because the government's going to rob you.
The stock market, currently at historic highs, offers limited growth potential as inflation continues to rise. The surge in the money supply since 2020 has driven persistent inflation, eroding the value of traditional assets like stocks and real estate. With wages and inflation climbing, Bitcoin stands out as a promising alternative, positioned as honest money. It offers a safer store of value in an increasingly unstable financial landscape. For newcomers to Bitcoin, it's essential to understand its volatility and avoid the temptation of chasing price peaks. Instead, focusing on long-term holding and dollar-cost averaging is the recommended approach. Bitcoin's potential to reach $1 million per coin within the next decade makes it an attractive asset in an inflationary world. Currently representing less than 2% of global assets, its growth potential is immense. As the best form of money ever created, Bitcoin is poised to reshape the financial system, offering a secure and promising future for those who embrace it. Let's watch more clips from the interview.
And I think it's really important and incumbent upon all senior Bitcoiners or people who've been in it a while and they're trying to orange pill their friends to explain to their friends what this asset is and how volatile it is in these early days of adoption. And the only way, as you and I both know, the only way you really get hurt in Bitcoin is to chase a new price high, to then have it go over the top of the cliff and go down, 20, 30, 50, in worst case, 70 or 80%. But I don't think we'll see many of those anymore. But I mean, 50% down seems entirely doable to me, from any level, really. And then to sell, because the cycles tend to be about 4 years, and everybody who's been in it over 4 years is in the green, has made money on it. But but it's sad, and some people just don't understand that. And again, it's having a long time preference, and so it argues for dollar cost averaging. It argues for buying it when it's down. I mean, you can, how expensive it is. There are models that you can use to look at that. What multiple, how far above or below its 200-day moving average is it? I mean, when it's below its 200-day moving average, it's obviously tends to be on the cheap side. When it's way stretched above that, it can be a little bit ahead of itself. And so one would say that the best way to get involved. I mean, right now it's below its 200-day moving average, I believe. I'm not 100% sure of that, but I think it is. And so it's probably a pretty good time to be buying right now. I mean, the power law model actually, I think, has some predictive capability. I mean, there's a 97% R squared on, looking backwards on the price there. And I think the power law has it today. It should be at about 97 as fair value. So it's 82. You're buying it at a discount, and it's the nature of the asset. I mean, I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125, it'll lose half its value. I mean, one thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. I mean, in the early days, I think there was one drawdown that was almost 90%. I just can't see that happening anymore. I think that, and there were several that were 70%-ish. I think that even those probably are unlikely. But, when I advise somebody buying it, I say, look, buy what you can live with for a long period of time, i.e. 5+ years, and understand that if it goes down 50%, the correct move is to double down, not to sell it. Or if you don't want to double down, fine, but just hold it, because as you and I both know, it continually hits higher highs and higher lows. So I mean, obviously better to be buying during one of those low periods. But if what we're talking about here is an asset, particularly you're young, that you're going to hold for 20, 30, 40 years, I mean, if these are going to be worth $1 million a coin, and I see that happening within 10 years easily, does it really matter if you bought it at 80 or 96 or 105? I mean, all three of those prices are at $1 million a coin are going to look really good. So that's kind of my advice. Another thing I say, I mean, on making the case for buying it, the two other things I use, because I have a lot of friends who are, fairly well off, and I've tried to convince them to buy it. And some I've been successful. Most of them I haven't, to be honest with you. Most of them think I'm nuts. And what I say to them is, I say, look, guys, if the financial system is the Titanic and it's going down because the government's out of control and they can't stop printing money, which is what the book talks about, and Bitcoin and gold are lifeboats, and Bitcoin's the best lifeboat. Okay, so I paid 10 grand for some seats on the lifeboat. I paid 400 for one seat or two seats. And I recently paid 70 grand for another seat, whatever. Okay, the price to you today is 80 grand for a seat. So you can either stay on that Titanic or you can buy a seat for 80 grand. Do you care that I bought some at 10? I mean, look, Max bought a bunch at 2, and I'm jealous as can be about that. But, I wasn't smart enough to see it back then. I didn't do that. So be it. I mean, everybody feels like they pay too much for Bitcoin. And everybody feels like they don't have enough Bitcoin. And yet, wait 10 years. And people are going to look at you and like, holy shit, you bought it $80,000? That stuff's worth $800,000 a coin. You own a full coin? Oh my God, that's stunning. I mean, that's going to be the progression, in my opinion. So the other thing I would say that I like to emphasize again in the book is the chart by Jesse Myers. It just shows how early we are, right? There are $900 trillion of financial assets in the world: stocks, bonds, real estate, cash, all that stuff. Bitcoin is less than 2. In fact, I checked this morning, it's like 1.6. But at 2, it's 0.2% of all the financial assets in the world. It could go up 10x, i.e., we could go from 80,000 a coin to 800,000 a coin. and it would still only be 2% of all the assets in the world. I mean, really? I mean,
So early.
yeah, we're really very. I mean, and the big scale of things. If this is the best form of money that mankind has ever created, and I believe it is. I know that sounds hyperbolic, but it's not. It's a technology that cannot. It's a form of money that cannot be diluted. We've never had that before. Let me emphasize: we've never had that before. It's new, right? A technological innovation. If that's the case, if it's the best form of money that's ever been created, why shouldn't it become the most valuable form of money ever created? I think it will. So, that's how I see it.
Bitcoin's recent price fluctuations have traders divided, with some predicting a potential drop to 65,000 after a 14% rebound from a 4-month low of $76,600. Bitcoin has struggled to maintain upward momentum, facing bearish pressure at the 87,470 resistance level. Analysts highlight technical patterns, such as the dark cloud cover, in a perfect rejection of higher levels, which suggest further declines. A break below key support levels could see Bitcoin testing the $65,000 to $74,000 range in the coming months. However, the long-term outlook for Bitcoin emphasizes the importance of focusing on its fundamentals rather than short-term market fluctuations. Bitcoin's volatility is a natural part of its adoption journey, especially in its early stages. The recommended approach remains dollar-cost averaging and holding through inevitable dips. Despite potential corrections, Bitcoin's value is expected to rise significantly over the next decade, with the possibility of reaching 1 million per coin. As Bitcoin's adoption expands and the global financial system grapples with rising inflation, its role as a store of value becomes increasingly clear. Often seen as a lifeboat in the sinking Titanic of traditional finance, Bitcoin offers a safe haven for those looking to preserve wealth in an unstable economic climate. As we conclude, with the current market volatility, do you think Bitcoin's long-term trajectory remains bullish? Let us know your thoughts in the comments below. Share this video and don't forget to like and subscribe.